What's up, everybody? So today we're going to go over how to mark up our charts as a scalper. So as a scalper, the main thing you want to use is we're going to type it out right here. Your higher time frame, you're going to only use 3 time frames. So for our analysis, our bigger time frame is going to be our 1 hour time frame. That's for our bigger time frame analysis. And then for our entries is going to be our 15 minute to 5 minutes. And then so let's get this time frame. All right, boom. So our analysis, we want to look for, oh, wait, give me a second. And we look for our key levels. So our key levels are going to be, let me do this real quick. 3 or more touches to be considered a key level. So that's what we're going to look for. So I'm going to mark it up and show you how we do so. So remember, higher time frame analysis, we use the 1 hour time frame, and our entry is going to be the 15 minute to 5 minute time frame for our entries. So what I obviously see is key levels. So like I said, we use key levels. I mean, we look for key levels when price touches multiple times. Like I obviously see this key level area when price is playing the active resistance becomes support right here. See another level right here. I see a level right here. And I see a level right here. Don't mind trying to fit them, just as long as you know that price is playing the act of support or resistance becomes support right there. So this is what we look for. We look for break and retest at key levels. So what my understanding is, price has it likes to respect key levels a lot. So what I would use is my Fibonacci tool right here. And I would see that price created a double bottom at this area. So this is using our higher time frame. So let's take off the EMAs real quick. Price is rejecting the 38.6 level. So what I would do is I would scale in onto, let's draw like a little line right here. Horizontal, vertical, right there. And I would scale down to the 15-minute time frame. Now on the 15-minute time frame, it is showing me this area. It's showing me a inverted head and shoulders pattern. So what I will wait for is price action. So now that I see that price has created an order block right here, I will look to take an entry after the close of this bullish candlestick. So when price closes right there, I take entry right here. I like to put my stops below the previous low, right here, the last low. And I like to target. So this is how I set 3 TPs when I'm a day trader. But I like to, when it comes down to scalping, I tend to only look for the 0% retracement, which is like the resistance, and the negative 27. This is only for scalping. So as you can see, when price hits the first TP and then the second one, price likes to go key level zone to zone. So in your higher time frame analysis, which is the 1 hour time frame, you're only looking for a certain amount of people. You're trying to get in and get out the market. You're not trying to hold it all the way to negative 61. When you're holding to negative 61, you are not scalping anymore. You're intraday trading. So as you can see, look how it goes zone to zone when it comes down to trading. Right here, it puts straight to this zone, and then we got out and it started consolidating. So we can do this another time. Let's see. Let's delete this. And let's see if we can find another area. Okay, so I see an area right here when price created a double top. So remember, let's pull this over. Analysis on the 1 hour time frame, and let's pull the key level. So our key level, 3 or more touches to be considered a key level. Price breaks this low right here. So this is where we're looking for, is price to break this low. Now, when price breaks the low, we know that we are looking for a retest back to the broken low. So this is where we're going to put this area. Price broke this zone. Our breakout. So price breaking this zone right here, we want to wait until price breaks down to the previous broken structure over here, and then our retest. So this is our retest. For more confluence, what we like to do is use the EMAs. So a little breakdown, my 50-period EMA is the red, and my 8-period EMA is the blue. So what I like to do is I can see and look for price action patterns. So right here, I see this bearish inside bar pattern. So this is what I'm going to do. I'm going to mark off this area right here with the eclipse tool. And then I want to scale in onto the 15-minute time frame because price is retested back to the broken structure. And this broken structure is sitting below the 50-period EMA on a higher time frame, which is the 1 hour time frame. So by doing so, this is how we will look for a trade. That the higher time frame showed us the analysis that price is going to drop down, and it broke structure. And we have to retest back to broken structure. I will wait. I would not take an entry right here because price right here is just I create a high, a low, a lower high. So now we know that price is transitioning into a downtrend. I will wait until price breaks below the 8-period EMA and then the 50. And as you can see, when the 8-period and 50-period EMA has crossed, right, this is letting us know that price is getting ready to confirm. It's confirmed that it's in the downtrend. So we see that we have the retest back to the 50-period EMA off of this wick rejection. So, I mean, this is an aggressive entry right here. I would have taken an entry off of this retest. So this is why we use the 5-minute time frame for even more precise entries. And I would target the previous low, which is I see this order block right here, this bear candlestick and this large bullish candlestick. I would take entry right there and target this area, the last low. So I'm not trying to force trades. I'm going off of what the market gives me. As you can see, price drops down and hits that area. You can do this multiple times. Now, when we taking that entry, we got our pips and got out the market. We come back to the 1 hour time frame, and you can see that price. This is the open supply. This was the demand that was taken out. Price created a fresh level of demand. Price comes back up to the open supply, and boom, we see rejection at this level. But before that, we're going to use our Fibonacci, and we're going to put our fib at the previous high to let us know where is price looking to do. So what I like to do is I like to put a box around the 61.8 and the 58.80 right here, and let us know that this is like our small level of resistance right here. So small level of resistance is letting us know it's like a ceiling. So price is failing to break this level. So I'm going to go back to the 15-minute time frame. And with this area, we will do the same thing that we did to collect that last TP. So right here is what we do. The same order that we did right here, we're going to do this right here. I see this bearish engulfing right here. So I'm going to take an entry right here. I'm going to pull out the fib from the last retracement. Let's pull this down some. I'm going to pull it over. Price is now at the 88.6 right here. So now this letting us know this is still a retracement. This is our last resort retracement, the 88.6 and the 78.6. Price likes to, on silver, it likes to go for deeper retracements, which is the 88 and the 78. So this bearish engulfing right here. This is where I look for an entry right here. And it's aggressive, and I put it at the previous high, which is right here. And then we do the same exact thing. We target lows. So as you can see, putting it at the previous high, we pulled it over. Price it came all the way up and almost wicked this out. By almost wicking this out, I mean, yeah, with it almost wicking this out, a lot of people would have been scared. It's coming to take out the liquidity right here and take out sellers that have the stops right here and here. So by that happening, you can see that price starts to continue to go down and hit this zone. So what we're going to do is we're going to recap everything that we just been taught. We use the higher time frame for our analysis, which is the 1 hour time frame. As you can see, 1 hour time frame is what we use for our analysis. This is a scalper's way of trading, marking up. Our entries are going to be the 15-minute and 5-minute time frame. So you can see how we broke it down when price broke structure and then retested back. This is where we look and take our entry. But in that's going to be it for trading. The markup session. And this is how you view the market in the scalper's way.